Are you paying yourself correctly from your small business? My name is Ryan Poblete. I'm a freelance bookkeeper. I've been a bookkeeper for 3 years, and I help small business owners with their QuickBooks and accounting. Today's video is about how to properly pay yourself from your business, and it's going to depend on how your business is structured. The business structures that I'm going to be going over today are 1, if you're a sole proprietor or a single-member LLC, 2, if you're a partnership or a multi-member LLC, and 3, if your LLC is taxed as an S-corporation. Firstly, if you're operating as a sole proprietor using your social security number or as a single-member LLC using your employer identification number, whenever you need funds, you can just transfer them out of your business bank account. It's important to note here, I'm talking about having 2 separate bank accounts, one for your business and the other one for your personal banking. And whenever you take funds out of your business account, that's known as an owner's draw. So whenever you're categorizing transactions in QuickBooks, it's really important to set that up correctly and to use that owner's draw category, since this is affecting your equity and not profit. I'm going to be talking a bit more about equity later on in this video. Next, if you are a partnership or multi-member LLC, there's 2 ways to pay yourself: taking distributions or guaranteed payments. Partners can also take draws, aka distributions, whenever they need to, and not all partners are required to take these distributions at the same time. If a partner works actively in the business or if they contribute capital to the business, they can take guaranteed payments. This should be discussed by all the partners before operating and written in the operating agreement, since, like the name implies, these payments are guaranteed to partners no matter how profitable the business is. And they can either take these guaranteed payments as a percentage of capital or as a fixed amount. When categorizing in QuickBooks, these transactions are counted as a business expense, which lowers the business's profit compared to these draws or distributions, which directly affects the equity of the business. The main thing to note here is to make sure you're categorizing these transactions correctly. Lastly, if your LLC is taxed as an S-corporation, you need to make sure you pay yourself a reasonable salary through a payroll system. What does this mean? This involves setting up payroll, since you are now an employee of your own business and you're going to be receiving a W-2 from your company at the end of the year. And as a business owner, you can also take these distributions from your business whenever you need to. If a distribution is made and there are multiple owners or shareholders in the S-corporation, everyone needs to take the distribution at the same time, and how much that distribution is, it's going to depend on the percentage of ownership. How does this affect your financial statements? I'm going to hop on the computer and I'll show you how. I'm going to go over categorizing distributions and guaranteed payments. If you take a look at the sample company, if you go to the transactions and scroll down, I'm just going to assume that this transaction is a distribution. So whenever I categorize this, I'm going to put shareholder distribution, and I also created a subcategory for the specific owner's name. And once this transaction is categorized, this is going to affect the balance sheet. At the bottom, if you scroll down, it's going to affect the equity section. And you'll see here shareholder distributions and the specific owner's name. And equity is basically the true value of your company after you pay off all debts. If we head back over to the transactions, I'm going to assume that this here is a guaranteed payment. I also created a subcategory for the specific owner's name as well. And if you categorize this transaction, this is going to affect the profit and loss. It's going to show up as an expense, which lowers net income. One last thing I want to clarify: draws and distributions are interchangeable terms, but if you want to keep it technical, stick to, if you're a single-member LLC or a sole prop, calling it an owner's draw, and if you're a partnership or an S-Corp, calling it a shareholder distribution. That's all I have for you guys today. Thanks for watching my video. Hope this helps, and wishing you all a great day.